Welcome to a Wiser Retirement Podcast, where we cover financial topics such as retirement planning, tax planning, portfolio management, insurance, estate planning, and now crypto, so you too can have a wiser retirement. I'm your host, Casey Smith. Guiding you to financial freedom is my co-host today, Robert Swarthout. Hey, Robert.
How's it going?
Doing good. So we do this once a month.
We do.
We dive into the deep world of crypto and all things crypto.
Yeah, or at least we try to.
I got an email from a client yesterday. She's a great artist. She's a local artist. Has things up here at the gallery down the street. She says, "Hey, I've been researching NFTs."
Whoa!
And people are telling me I should do some digital art for that. What do you think about that? She's like, "I'm not so sure about this crypto stuff. I don't know how legit it all is." And I'm like, Claire, someone just sold $120,000 in NFTs and they paid off their house that was about to be foreclosed on. So, it's a real thing, right?
Might be worth some time.
It might be some real time. But it's, the world's changing. I feel like it's changing at a quick pace. And I'm not old, but I'm starting to feel a little older. I had to Google Web 3.0. Last week.
Well, that's kind of the new marketing term. They're kind of referring to all this crypto and DeFi and all the other stuff. Kind of, it's a bit more public friendly term to kind of refer to.
Call it Web 3.0.
Web 3. Yeah. So it's but on a quick thing on the NFTs, I read this morning that Salvador Dali's descendants, I think it's maybe grandchildren, great grandchildren, are turning some of his never released art into NFTs and releasing them.
Oh wow!
So yeah, NFTs are a little bit, they've evolved beyond silly little JPEGs into more serious JPEGs. So,
oh, I never bought one.
Yeah, me neither.
maybe I don't know. Yeah, again, are we gonna have like digital screens in our house to display these things? Because some people are paying like $500,000 for artwork.
Yeah,
that's all digital.
Well, you can look at it on your phone, and that make you happy?
Yeah, I don't know. Does that mean framers go out of business eventually?
Yeah.
We don't have any traditional paintings in our homes anymore.
It's a generational thing for sure.
What about Picasso? How are we going to get him digital?
Who knows?
Okay, so when we start with kind of a rundown, been a lot of volatility in the crypto market in the last month for sure.
There has, we last talked on December the 21st, and today is January the 26th. The market has been sideways and then down, sideways, then down, and down being... and we'll take another 10, 15, 20% off. So Bitcoin back.
So you're saying it's a sale?
I'm saying it's down.
Okay.
It could be, about the point you think it's done going down.
Right.
Then it goes down more. I've been to this kind of point where I haven't bought anything in over probably 2 months at this point. It's kind of like, you know what? I actually don't mind missing the bottom a little bit. And I would like to see some sustained green days before I kind of decide to buy anything. So when we talked in December, Bitcoin was at 48,000 and change. Today it's 37,000. It bottomed roughly about a week ago, I think, around 32,000. Mm-hmm. Ethereum was $4,013. Today is $2,537. So again, another big drop there. XRP was 89 cents. It is now 62 cents. And, kind of quantifying all this across all of crypto, the total market cap was 2.27 trillion. Today it's 1.7 trillion. It's been a bloody month.
Yep. And
it's Bitcoin roughly, that's a 45% drop from its peak in November of 69,000 to where it's at today. And since that period of time, the total market cap is down around 35% as well.
So I still haven't been able to find the correlation between specifically Bitcoin, but other currencies as well, with the market. Because I see the stock markets, we're entering correction territory now, which honestly, I'm not concerned about that at all. That's healthy. There's no other place to be right now other than stocks if you're concerned about inflation.
Right.
If you want to be sitting in bonds and collecting your $100 a month and it buys half of what it did a couple of years ago. Now we still need bonds, more for the black swan events, but crypto is supposed to be all these things, but yet it seems to track the S&P, but just in a much more volatile way. After initial creation, you can't count those first, 8 years or so.
Yeah, it's,
just in the last 12 months, let's say. Very very short-term analysis, but
yeah. There's people that like to believe that crypto is uncorrelated to the stock market. That is proven untrue.
No, right.
And then there's, if you kind of look at, I haven't necessarily drawn it up on the screen, but it feels like when the market's been down, crypto's been down, market being stock market.
Right.
And then the days that the stock market recovers, crypto doesn't recover. So there's sideways and down days in crypto right now. There's
true.
No positive days for, there functionally is, but nothing like the stock market has.
Yeah. But we also have to understand that I think there's different factors that play inside crypto because, again, we talk about this every month, but there's no regulation officially on it. There are major players that are manipulating the market. There's no doubt about that because it's not illegal for them to do it. Right.
It's profitable for them to do it.
Exactly. Yes. So it's a bit of a wild ride. It's not something that as U.S. citizens, I think that we fully grasp. And we'll talk about that with inflation later, but the volatility of a currency, we're used to a very stable currency, right?
Right. And, when people think about the stock market, a bad day is like 2 or 3, 4 or 5, maybe 5% down.
Right.
I mean, that's the average day in crypto. The drops have been 20%. If the stock market was falling 20%, people would be jumping out of windows
right.
in some parts of the country. So it's interesting to kind of see it play out.
So let's shift a bit. Let's talk about a digital dollar.
So there's many countries, especially over the last year and a half, that have kind of come out publicly saying they're doing trials, tests, and the like of something they call a CBDC, or central bank digital currency. It's, we have digital money now. We use credit cards, that kind of stuff. In the U.S., it's not as much of an issue, but in different parts of the country, different parts of the world, they use physical cash. So like moving to more of a digital economy is a big deal. A CBDC being on the blockchain, or in some form of a blockchain, they're using different ones, allows, in some ways, it allows the non-banks to come into the financial world at a cheaper rate than they could otherwise. Like they don't necessarily have to interact with a brick and mortar bank, as you might think of it now. They just need a cell phone, and then they have a wallet, and that eventually gives them an account. And there's different, there's a lot of experimentation on CBDCs are happening down, and surprisingly, or not surprisingly, I guess it depends on how you look at it, in the Caribbean. There's like the sand dollar in I forget which country that is, and different ones. So the big country that has actually rolled out at least a portion of their digital currency is China. At first it seems like everyone's like, oh yeah, CBDCs. Kind of have to step back and kind of like, okay, what's the positive and what's the negatives of this? The negative of a CBDC, depending on how it's designed, the Chinese one is designed this way, where there's a lot of surveillance built into it. So like if you go and buy something at the gas station in China and you buy a pack of gum and a soda, that receipt data is pushed back to the central bank. Right now, if you run a credit card in the United States, they just know you went to the gas station and bought something. There's no even the credit card companies don't know what you bought, let alone the central bank. So, in a society that has social credit scores like China does, like they could tie it to it. And, there's rumors that they could say, oh, you were a bad citizen this last month, so you can't do these things with your money, which is like a different world.
Yeah.
But the positive is it brings, potentially in other places, it brings people into the system. So, kind of have to weigh that. The Fed in the U.S. Week or so ago did release a white paper kind of talking about how they're thinking about a CBDC here domestically, and how they are trying to look to, they're doing a 120-day comment period. So sometime, roughly April, May timeframe, that will close, and I guess they'll move on to, trying to figure out a design. I think they've already got it figured out, and this is all just for show, personally. There's been a lot of stuff happening behind the scenes. Been different groups that kind of do some internet sleuthing and like trying to figure out what's going on. And there's been a couple of cryptos that have been working with them and MIT to do this for over a year now. And now they're just kind of talking about like, oh, we're starting to think about it. I'm like, no, that we know that part is not true.
Right.
So it's, politics.
So what's the benefit to a U.S. citizen for having $1 on their phone, essentially? And we already have like Apple Cash. We already have Venmo. We have so many ways that we can move $1.
So if you rewind roughly a year ago, I guess the government / the Fed were doing these stimulus checks they were sending people. And some of them they're doing through mail. Some of them you're connecting through your IRS checking account details, and they would deposit the money.
Right.
It was a bit of a workaround, but it kind of worked. If in a world where every citizen or every, I guess, adult citizen had a central bank digital currency account, it's like a virtual thing.
Yeah.
They could have literally sent stimulus checks in a second, but probably within hours. And knowing everybody got the money and it went to the right people because there's been KYC that's happened against that account and all that kind of stuff.
Right.
Like they would have saved money, so they don't have to mail checks and all the other time involved. And
right.
So
which means potentially they send more money, which makes us more dependent on the
UBI,
government.
here we come. Yeah. So, I say that as a positive, but that's an example, I think, of a use case that might directly affect. For the most part, people don't interact with the Fed, right? They might have cash in their pocket, but they interact with commercial banks. They don't interact with the Fed. And the CBDC that the Fed is proposing is a tiered system where you would not necessarily, at least what they're proposing now, you would not have an account directly with the Fed. You would have it with a commercial bank that knows who you are, and they've done all the the AML stuff, the KYC stuff around that, and then it would be ported or somehow hooked into the CBDC that the Fed runs. So,
interesting.
I think we maybe mentioned this on a 2 or 3 podcasts ago, but the model of the CBDC that I think that the Fed's going to do is like a public and a private one, where there's parts of it that are not accessible to the public, or I guess I shouldn't have public, but permissioned and non-permissioned. So you have to have permission, like the commercial banks will be able to connect in. They'll be permissioned to work against the Fed's version of it, versus us citizens will have more of a commercial bank outlet to it. So
interesting. I don't know. It seems like a lot of great content for all the conspiracy theorists.
There's not a shortage.
Okay, let's talk about Biden administration executive order for crypto regulations. Both saw that come across the news here recently.
Yeah, it's not really clear what's going to happen there, but basically it looks like Biden will sign an executive order potentially this week, maybe next week, that basically directs government agencies to work together. And there's a bit of a ha-ha there, but to help build regulations for the U.S. I'm not quite sure why this has to come via executive order. Maybe it's more of trying to push Congress to do something, because that's really where it needs to be a law.
Yeah, correct.
But maybe this is what kind of kicks them in gear, because they're kind of doing it, kind of not. If I had to place a bet right now, I think that right now the SEC thinks that they need to regulate it. The SEC is just looking for more nails for their hammer. I think Bitcoin is not regulated by the SEC. It is regulated by the CFTC because it's been deemed a commodity. So that's it's the only one that is different. And then the rest kind of aren't regulated, but the SEC is trying to regulate them underneath their current rule set. I think that there's either the CFTC or a version of the CFTC that is crypto specific comes up long term. That's what I think where this is going.
But crypto is so global. So basically they can only regulate transactions that are on U.S. soil.
Yeah, for citizens and businesses, absolutely. Yeah. But being the dominant player in the finance world around the world,
they start leaning on other countries.
They lean, or the innovation doesn't happen on U.S. soil; it goes outside. But again, U.S. being a reserve currency, U.S. dollar being a reserve currency, there's a lot of sway there to kind of push your weight around. the stuff that we're talking about, it's the stuff that makes it out publicly. Like I would love to be a fly on the wall, kind of seeing the politics behind the scenes, because there's a lot at play. I mean, like the way the Fed's been printing lately, that only works when people are willing to buy your treasuries.
Right.
Granted, we've kind of been buying them ourselves, so it's different discussion. But if you're not the reserve currency, or you kind of lose some of that standing, it's maybe they're being prudent. I don't know. It seems like they're taking their time, and they probably are. It's probably a mix somewhere in the middle there.
Yeah. So that really combines both topics, really. So creating your own U.S. Digital currency, but then also creating laws and regulations around cryptocurrencies in general. That probably would be in the best interest of the country.
Yeah, it's like you said, our two topics are coming together here. And kind of the crypto version of that already exists. That's in the middle is stablecoins.
Right.
It basically a representation of the dollar. It doesn't necessarily move in value in theory. There's basically two big ones. There's USDT, with like a Tom at the end, and there's USDC with like C as in cat at the end.
Are those essentially the same, or competing?
Well, they're competitors, but they're very different underneath the hood.
Gotcha.
USDT is not US based. They're I think Caymans or somewhere in the Caribbean. So,
but tied to the US dollar.
They claim.
Okay, gotcha.
I mean, like the price.
Point made.
They try to do it, but what is backing up that value there? Like let's first talk about USDC, the second one. It is a US regulated one. It's a company in the US. Like they do dollars, like literally cash, and treasuries behind the scenes. That's like full stop. That's what backs up their 1-to-1 ratio.
Sure.
The Tether one, or USDT, is backed by many things. They hold Bitcoin as part of the thing. Well, when Bitcoin is down 50%, where's the collateral going? Like,
right.
Or there's been rumors that part of their reserves is based in Chinese real estate bonds. Okay, well, some of those companies aren't doing so well.
Right.
Part of it's rumor. Part of it's like there's never been a full audit. Tether is I don't know. I haven't looked recently, but like let me look it up real quick. A $78 billion market cap. That's a lot of change. Like, to think that you have it backed up. There's never been an audit. There's been an audit at USDC. Like, there's a company, Circle, that runs it. It's domestic. Like, it is certainly smaller being, let's see, USDC is a 48 billion market cap. So, smaller, roughly half.
Right.
Long term, I think these exist because they can exist outside the U.S. And the U.S. is not the entire world, obviously. But I think CBDCs come in and kind of maybe make some of the use cases of these stable coins, kind of moot.
Right. All right. So in the headlines, the last year at this point, but here in the U.S., we've dealt with inflation, or dealing with inflation. Man, I need to buy a truck, and my daughter is really involved in horses and eventing, as is my wife as well.
Got a truck on order as well.
And I was, after Christmas, we always my daughter and I always do shopping together a couple of days before Christmas up in Highlands, North Carolina. So we're coming back from kind of a quiet weekend. There's no lines up there. It's great. Yeah. A lot of boutique shops, and get unique gifts. And she's like, "Hey, Dad, let's go by the truck place." So we end up at this truck place, and we drive this truck. And I was like, "How much is it going to set me back?" And the guy goes, $95,000. And I was like, $95,000. He goes, "But if you were willing to wait about 4 to 6 weeks, I can order it for you for $84,000." I was like, "So how about I just buy 9 of those? Right. I can get a free truck."
Yep.
It's crazy that I mean. That's supply demand. That's not so much inflation. That's just
supply chain.
Yes,
problems,
supply chain problems, right? But everything's just costing more. That $84,000 truck, it's not the same as another friend of mine. Her truck is, I think she paid $76,000 for it, but the price difference between the two trucks today is only $4,000. So a $76,000 truck a year ago is now about $84,000.
So all the supply chain things, it's disrupted a lot. I have a home I'm working on down in McDonough, and we needed some gravel. Okay. Rocks that come out of the earth.
Right.
Like the supply chain is pretty limited here. Gravel is up 75% in the last year.
That's crazy.
Like diesel's not up 75. I'm like trying to figure out like why we are paying 75%
Why are you
more
paying
for rocks.
70% more?
This is kind of like, it kind of blew my mind.
Yeah, and you wouldn't think they would have shut down a quarry because of COVID. I mean, These people aren't touching each other, right?
Yeah, they're far away from each other.
Pretty far away, I would think. Maybe I don't understand the whole process. Or maybe probably labor shortage, if I had to guess. That's a pretty dirty job.
Yeah.
So, cool job. Big, huge trucks.
Yes.
These earth movers. Yeah.
But
and we see it in other things. Obviously, you see it at the grocery store. So State Street, BlackRock, Vanguard, they all point toward inflation continuing to be around that 7% mark this year until the end of the year, and we'll start seeing it tapering off because they believe the supply chain problems get fixed. So, as we meet with clients here, it's like, oh man, inflation's crazy. All right. So then I go read this article about inflation across the world. Right. So right now in Brazil, inflation's around 10%. 10%. And it's been there for it wasn't a COVID thing. It's been there for a while.
Yep.
If you live in Turkey, inflation at the end of 2021 was 36%. 36% inflation. That's crazy.
Yeah, I had read an article.
I mean, there's no way wages are increasing that fast.
Right. Yeah, it's a mess for sure. I read an article back, last fall about a guy in Turkey that is taking USDT. He's buying it in the European market somewhere with euros or pounds, I forget. And then he's obviously transferring it via the internet into Turkey and selling the USDT because people want to get rid of the lira and buy into something that's more stable. And like he's making a killing because it's like he can charge such a premium because people that with hard cash in Turkey can't get access to doing basically the system that he's doing.
Right.
And he's like something like 50 cents on the dollar. He's like selling these USDT at. It's like, or $2 2 USDT for $1.
Which kind of makes the point. You have third world countries, you're having tremendous amount of inflation and volatility in those prices. And what crypto does for them is actually bring a bit of stability. Because you think about the Bitcoin movement and the value up and down. Mm-hmm. So think about Bitcoin in correlation with Turkey's currency. Because they'd be moving opposite of each other at times, right? So there'd be tremendous gain. Also, there's times when they're moving toward each other. But I'd argue there's less volatility probably in Bitcoin or any other platform that probably is in their own currency.
Yeah, I mean, that would be interesting to kind of like really look at the numbers because, again, Bitcoin's been down 45% since November.
True.
I mean, that's some serious inflation.
That's true. But down 45%, but then their currency, you lost 36. So maybe it's only 9% difference.
Right. So it's only a month's worth of inflation difference there.
Right.
I don't know. It does present different ways to think about it. Crypto, if there's, if the crypto has inflation built into it, a lot of them have it pre-programmed where it's like, I don't know, some set 2 or 3% a year. Others are more deflationary. And it's kind of like, what you're buying into versus a fiat currency. They can change their mind every single day.
Here, I found the winner. Argentina, 50% inflation last year.
Wow. I think that was the one that I was mentioning to you before we started about how I saw an article where there was literally cash laying in the gutters in the street because it's useless paper.
Confederate money.
Yeah.
So that goes back to Bitcoin is supposed to be inflation protection.
No, that's the way Bitcoin maximals like to market it.
Yes,
very clear.
Like literally, like
supposed
yesterday
to be
I saw an article that said that. Literally, it's not even like, oh, maybe this is what its use is for. Now, in 2035, is that when Bitcoin supposedly will stop making more of itself?
It's a long period of time in the mining of it. There'll be new, no more created. There is a maximum of 21 million Bitcoin ever.
Yes,
there's like 18 million or so.
So basically, it's like a slow release.
Right.
It's like they're slowly releasing more Bitcoin into the system, and then by 2035, thereabouts.
Yeah.
Then they'll make no more than 21
million total.
20 million total.
In every couple years, the amount of Bitcoin being released or mined each day, month, whatever, halves. So it becomes more difficult to get, or twice as difficult to get the same amount.
Gotcha.
So that's it. It's almost like program price escalation in there.
Yeah.
Who knows? I had a conversation recently with a guy. He's like knows I'm into crypto, and calls me, and he's like, "Hey, I'm thinking about. I currently don't own any crypto. I'm thinking about buying Bitcoin because I want to try to find an inflation hedge." And I was like, "I'll tell you right now, I'm no like economist, but anybody that pitches that crypto is an inflation hedge or not, they don't know."
Right. No.
We're
still discovering.
Crypto is 10 years old. We have not had, outside of the last year, we have not had inflation. We have no idea how it's going to react.
Right.
I was like,
the last time we had inflation would be probably, or interest rates were increasing would be 2013. I guess in 2017, rates increased as well. But we
no
didn't
inflation.
No inflation. We had a manufactured inflation for a long time.
Yeah. So it's, I don't know. We're all discovering this together is really what's going on.
Right. The reality is that we're still trying to determine what crypto is for in many different fronts. We're trying, is it for inflation? Is it stored value? I'm not going to store my reserves in anything that loses 45% in a month.
Right.
Is it just for cross-country transactions? Is it because we don't believe in the governmental system that we live in, or is it needs to live outside the government? So if something happens, then it becomes much more valuable at that point.
Right.
If you think of catastrophe, U.S. government shuts down, like USSR did.
Right. Yeah.
Well, having money in Bitcoin is not such a bad thing at that particular time, right?
Or any crypto.
Or any crypto at that point, or even just gold, really. But still, so we're still discovering the purpose of it. We know that it's here. I don't think that it's a fad.
I was having a conversation yesterday evening with a guy about, crypto. There's a vast amount. I mean, there's 14,000 of these things, but the vast majority of them are useless and just complete trash. But the ones that are trying to actually really solve problems in the world are the ones that I think make it out the other end of this kind of tunnel that we're in right now. And I focus on the ones that have commercial use cases. There's retail use cases and other things, and those are just noise to me. NFTs being part of the noise right now. But the commercial use cases like trade finance, Forex markets, cross-border remittance, those kind of things,
right?
Supply chain tracking. Those are the use cases that, when you look at the amount of money that goes through those kind of markets now, it's measured in trillions of dollars, potentially trillions of dollars per day. And, currently we talk about, when we do our market recap, what's the market cap of crypto? Or what's the market cap of X crypto or a particular crypto? At the end of the day, I think market caps are a terrible way to measure these things. It is a relic of traditional finance.
Right.
To me, there's going to be new metrics that come along that kind of help measure these things and how well they're solving problems, or like their utility, like how much volume is going through the system. And then they potentially get ranked upon that. But right now, we don't have regulation. We're missing a lot of things. It's really, really early. If this is a baseball game, they're singing the national anthem right now. We hadn't even really started. So
right.
It's evolving quickly, though. I used to feel like I could keep up with the news. Now it's like I hope to be able to keep up with part of the news.
We were definitely leaders in launching or using exchange traded funds, ETFs, as a firm back in 2004. And I remember naively thinking that we're going to be experts on every ETF that is ever launched, because there are only 200 of them at the time, right? It was really simple. And now there's like 2,200 ETFs and new ones being launched all the time.
Is this why you don't sleep? So now you're an expert on 2,200?
No, we are not an expert on 2,200 ETFs. That's almost impossible. Yeah. Even ETF.com is not even an expert on 2,200 ETFs. But it's I see it very, very much the same way. There's a few players at the beginning, and then it just explodes. And then there's the stupid ones, right? There's inverse ETFs, and then there's currencies that have no value to it whatsoever. It's just because someone created a meme,
right? Yeah, effectively, yeah.
And they're That's like, funny. let's follow this one, and it's funny how people are herd. People like to follow people. The people typically don't like to lead. So one person says buy it, and the next thing everyone's like, oh yeah, we gotta buy Dogecoin. Yeah. What's the purpose of Dogecoin?
It's an internet thing.
Right.
Yeah, it's
and there's other ones just like it that aren't as popular, but it's the same concept.
I will say the last month and a half, my phone has not been ringing nearly as much as it was last fall, because with the markets being down, it's people are not looking to buy, which is opposite.
Which is if you believe in the concept.
Yes,
it's the opposite.
Bigger conversation there, but yes, it's the opposite.
Yeah. Well, no, it's the same way with. I see some of the same articles in crypto land that I see, or that I say in investing. Can't get emotional, focus long term. But it's like human nature, greed, right? And so many people just they read about, buying Bitcoin at $100 or $400, Bitcoin millionaires. And everyone's, I want that too. So they're rushing out to just buy anything and everything because they're hoping to replicate that. And it doesn't always work that way.
It doesn't. It's interesting. There's the biggest YouTuber that talks about Bitcoin is based here in Atlanta. I recently learned his name is Bitcoin Ben.
Okay.
He's a huge Braves fan. He's a huge Falcons fan. All the good stuff. But he has something upwards of like 1 million followers. Maybe more than that. But his videos get tons of views. He's got a team of people working for him, and it's almost like almost like a cable news network for Bitcoin or for crypto.
Okay.
But definitely Bitcoin. But he was, he started his channel in 2017. He was just a YouTuber helping people do consulting. And like he kind of evolved it in his own thing, and
right.
He's made some good money off of it. So yeah.
Oh yeah. Yeah. Well, Bitcoin Ben, and because I have a 10-year-old at home, Unspeakable. Who else? Original guys were. Oh man, I've drawn a blank, but there's some original guys that Dude Perfect. I think there's the guys that kind of started it a long time ago, and they're making tons of money.
Yes,
just tons of money. I mean, Unspeakable's house, I believe he's in Houston, and I see people all the time on like Instagram. Some friends like, we drove by the house, and they recognize the gate from all the videos they do.
Wow.
And I'm like, God, they have.
Like paparazzi.
They have star power.
Yeah.
And all they did was start a YouTube channel.
Yeah, yep.
And recent articles I've read too talk about kids today. You ask them what they want to be. They want to be like Instagram or YouTube famous. They don't want to be pilots or astronauts anymore. They want to be YouTube famous. So,
new world.
Yeah, exactly. Let's finish up with this. So we read. You sent me an email earlier that Ripple was buying back shares from investors. Explain that.
This is different. So Ripple's a private company. They, VC backed, raised money, something like the tune of like $300-something million, I think, over the course of their lifetime. But the last funding round was in December of 2019. They raised $200 million in that round at a $10 billion valuation. And, fast forward to roughly a year ago, and the SEC had filed the lawsuit against Ripple.
Mm-hmm.
Investors, the lead investor and I think the second biggest investor in that $200 million round, sued Ripple because the SEC sued them for these supposed
trying to protect their
investment, right?
Yeah.
And then I hadn't heard much about that lawsuit. I kind of figured it was just going to kind of sit out there until the SEC thing was decided,
right?
And then I read that Ripple is buying back the shares from those two institutional investors, and they're paying them a 50% premium. So in 2 years, a little over 2 years, they they 50% their money, which is
like a guaranteed.
Which is, I guess, in that world, it's probably great. I mean, obviously, a 50% return in 2 years is great. It's to me, it shows just how confident Ripple is.
Yeah.
Whether it's foolish or it's grounded in something,
right,
will be to be seen. But like, I personally own some Ripple equity. Bought it on the secondary market. When I first read the headline that they bought, the headline was incorrect. It said that they bought all outstanding shares from investors. I'm like, they didn't send it.
Yeah. I still see it on my account, right?
And then I kind of started digging in other articles. I'm like, they really only bought it back from these two. And then I kind of tied it back and I kind of realized it was the lawsuit. So it made more sense.
Right.
But
right.
it was just kind of interesting to kind of, you don't normally see private companies buying back shares. You see public companies buying back shares, but you don't see private companies. And
right.
I think part of the reason, who knows how Ripple funded this? I doubt that they went out and raised another round to do that. They own a tremendous amount of XRP, something in between 40 and 45% of the total supply. And not that all of it's liquid to them, but they get some of it released each month, and they may have been basically, saving up for a rainy day.
Yeah.
And kind of executed on
Well, I agree with the sentiment that yes, they definitely believe in what they're doing if they're willing to do, because I'm thinking they wouldn't have had to have done that. They could have just pushed this thing out.
And it wasn't like they just snapped decision and this went to their board. This is a big decision. So yeah.
Maybe they were like calling them every day and they just got sick and tired of it.
Yeah.
You don't know what's really happening in the background.
And, they've publicly said that once this case is resolved, that they will be on the path to an IPO. So who knows when this case gets resolved. The SEC case, probably unless it gets delayed even more, sometime this summer, June or July is my guess from what I can tell. But, maybe they're a fall IPO kind of path at this point.
And again, just to make sure listeners understand that Ripple is more like a company.
It's a C Corp.
A C Corp, okay. Yeah. Where Bitcoin's just kind of out there.
Yeah, it's not a security. Bitcoin's a commodity, but all the rest of cryptos are just out there. They don't have definition right now.
Yeah.
That's why we want regulation.
Which is why the SEC went after Ripple, supposedly.
There's a lot of theories there.
Yeah.
But there's a lot of stall tactics happening right now.
By the government.
On the SEC's part, that is frustrating as an XRP holder. We want to see the end of this, but at the same point, it seems like this lawsuit was used more of a weapon than it was to protect investors. It was who knows the politics behind the scenes. I hope someday it comes out. This would be a great movie, as much as it's probably boring to a lot of people. I would watch it. I don't watch many movies, but I would like to know the details. So,
all right, Robert. Well, thanks for the update. And look forward to talking to you next month.
Sounds good. See ya.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We would also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. We would love to hear from you. This episode was produced and edited by Lilton Moore. Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.